This is a follow-up video to the one that I made yesterday and sent out to everybody, trying to give everybody a heads up on this IMP crown pattern on the pound dollar 4-hour chart. Now, if you remember yesterday when we left off on the video, price looked something like this. Right at the very ending of the video that I made yesterday, we had this spike high to the 618 retracement. As I mentioned, that a lot of times we see the 382 patterns fail. Not so much that they fail, it's just that maybe it's not ready, or it's a fake. It's just enough to bait a lot of people in if they're holding too long. And then, especially if we see a T2 pattern like this develop with this divergence, we will see a retracement, definitely to the 382, and in most cases the 618. So I choose to trade off of the 618. Now, also with the IMP crown pattern, I'm looking for the right shoulder. In order to get in the trade on the right shoulder, I would prefer to see a 618 retracement, but a candle pattern. So as we ended the video yesterday, I mentioned we were waiting for the candle pattern to develop. There was not a candle pattern to get into the trade yet. So the very next 4-hour candle looked like this. It started to look a little bearish, and price was negative within that candle at the time that I completed the video yesterday, but obviously it closed positive. And then it took another 4 hours after that before we actually got our signal. This is our entry, this is our signal candle, this is that bearish reversal signal candle pattern at the 618 retracement level. So we have the crown pattern, we've got the center tip, the left tip of the crown, and now we have the right tip of the crown. So here's our entry. Our entry was on the close of that candle. The close of that candle is approximately 59.43, and right now, as the market's getting ready to close, price is at approximately 58.43. So we're up about 100 points. Now, I did send out an email to everybody that received this heads up video that if they're trying to trade this method, or if they just want to follow along just to see that it works, we are nearing the B low support level right here. I apologize because originally my A, B price swing, these letters were originally set here, but they move in time with MetaTrader. But here is the B low. Price is approaching that B low. That B low is 58.32, and right now we're at 43. So we're within 10 pips of that low. I recommend locking in some profits. Now, I've always advocated the idea that you should be using more than one lot if you can afford it. And in this case, if you're using 2 lots, the way I recommend trading and closing out the position is to take profits on the first lot at the B low, or when it gets close to it. We're up 100 points, lock in that 100 points, set the remaining open lot at a break-even stop, because we don't know that price is going to continue lower. At this point, we hope it will, and we hope that this 618 retracement will give us this projected Fibonacci extension target down here to 1.5600. That's the final target on this trade, on this 4-hour chart. But the problem right now is that we don't know if price is going to bounce at support and come back up again. So we need to lock in the profits there. The only way to confirm that price is going to move lower is to wait for a candle to close below the B low with indicator confirmation. And we don't have that yet. And even when that happens, we've got to confirm the indicators according to the indicators that I use for this strategy. I will post on the private Facebook group at the time that a candle closes below the B low if it is a qualified confirmed signal. At that point, we could expect that price would then move much lower towards the 5600 level. So that's how we traded this over the last 3 trading sessions. Now, I'd also like to show you some of the other trades that we took overnight during the Asian session, which is another trading strategy that I teach you in the Learn Forex Trading in 30 Days ebook course. So the first HL30 trade that we put on overnight was on the Australian dollar pair. This is a 30-minute chart. Remember, we have to use the 30-minute chart when we're trading the HL30 technique. So here's that start of the new day. The high here was 49, and the spike high on the new day was 51. So that qualifies within that 10 pip range. At this point, we have to wait for a bearish signal or reversal signal candle pattern. And here we get it. This is our first reversal candle pattern. So the entry here is on the close of that candle. the close of that candle, is 1.0414, and we're looking for a 20 pip target and a 20 pip stop. So here's what it looks like at this point. When we get in on the close of that candle at 14, we're looking for a 20 pip target, a 20 pip stop, and you'll notice here's the stop, here's the target. We're shorting this or selling this, and it reached its target within the first 30-minute candle. It doesn't always happen like this, and we don't always get an HL30 on every single currency pair, and there are times not to use the HL30 even if it shows up. I've made some videos and I put those on the free video section of the website, so please review those before you try or attempt this. Always use a demo account when you're trying out a new strategy. But here you can see that in this case, every one of them is going to be different, but in this case it paid within the next 30-minute candle. The next HL30 we traded was on the dollar Canadian. Now this one was just a little bit different here. Here's the previous day's low. This was at 99.39. Now this one was really important because I want to show you a couple of different things about how different each one of these trades is actually going to look. Every one of them is going to be a little bit different. It doesn't matter which technique you're using, they're not always the exact same thing. It's the structure that you have to go over mentally and also from a checklist. You have to make sure that everything is still in place and everything is still intact. So we have a low of 39, and price here comes down as low as, on this candle, 41. So that qualifies within our 10 pip range, and this could be a little bit confusing. Now as it turns out, this still worked and still turned out to be a qualified HL30 trade, but nevertheless the structure and the strategy still works. This is very different than the other ones that I've shown you so far. Now remember, the low of that spike low on the new day is at 41. Our overall previous day's low was 39. So that qualifies within that 10 pip range. The next thing we need to do is wait for a bullish candle pattern, reversal candle pattern, and here we get it right there on the close of that white candle. The close of that candle is 47, and that's our entry. So our entry is here at 47. Now we need a 20 pip target and a 20 pip stop. With an entry of 47, we would be looking at a stop loss of 27. Remember, a 20 pip stop and a 20 pip target. With an entry of 47, we'd be looking for a take profit level of 67. Here's 67. So let's review what happened here. We get an entry, price retraces, takes out the previous day's low, and as I've said before, if you do it correctly, one of the best ways to really confirm where your stop loss placement is to make sure, if it works out that way, is to make sure that price, the stop loss according to the technique, is below the previous day's low or the price swing, the actual support level. And in this case the stop loss was definitely below the low here, so we're okay if there's going to be any stop loss hunting. And you'll notice that price comes down as low as 37. So it takes out the previous day's low by 2 pips, but it still remains intact. The trade still remains intact and then eventually moves up. This one took a little bit longer, as you'll notice, compared to the Australian dollar. The Australian dollar HL30 worked and paid quickly within 30 minutes because there was activity in that moment. There was a reason for price to be moving, and that readjustment in price. In this case, the Canadian markets were closed. So it was going to be a little slower price activity, and that's one of the other reasons why we see this kind of price action. But nevertheless, the structure remains intact. When you see price coming down and testing the previous day's low and maybe even your support level, you can't panic and you can't close out the trade just because it's aiming at your stop. You've got to do the right thing. You have to let the trade work, and you have to control your thoughts and be aware of what is actually happening, not what you want to have happen. Here's the previous day's low. You'll notice that even with that test, there were still no candles that closed below that low on this time frame. Remember, we get in with a 30-minute chart, we're closing our trade with a 30-minute chart. So everything worked out just fine. This was a perfect trade, but they don't always look the same. Regardless, remember to remain focused on that checklist that you get for each of the trade strategies that I've shown you today in this video. All of those checklists are in the Learn Forex Trading in 30 Days ebook manual.